on a stock that has rallied 40% this year to scale lifetime highs, and that's Tube Investments. Nikki's here to tell us what could be working for the company. Nikki, a bit of a late bloomer, but the last 3 or 4 odd months, it's really hit its straps and rallied significantly. What's happening in Tube Investments?
So I'm going to start off by giving you a little background of what the company is essentially. It's a Murugappa Group company with a market capitalization of around 9,000 odd crore. If you look at the diversified portfolio that it has, it's across bicycle, it's engineering, metal forgings. All of this is a part of substantial business of the company. And if you look at the company is actually a holding company of 5 subsidiaries put together. Back to a little bit of history of this company. How did it start? Was initially it was known as TI Financial Holdings. 2017, the group the unit got demerged into 2 entities, that is manufacturing and financial services. Financial services continue known as TI Financial Holdings, whereas Tube Investment in its current shape and form was formed. In that case, we had all the diversified units out there. Let's actually look into what are the factors which are essentially leading to this rally, or the sound fundamentals that are in place for the company. Let's look at the top line, where it's getting the diversified revenue streaming business from. So as I just mentioned, metal formed products, that as a percent of your total sales, that occupied to nearly 34% of the complete picture altogether. Engineering, that division occupies more than 40% place in your top line. In terms of cycle, it's also a bicycle manufacturer, 17% growth coming in from there. And gears, that forms 6% of your overall sales pie put together. And the company is among the 3 players among the leading top 3 players in these segments. And apart from that, it also continues to enjoy strong financial portfolio at this point of time. The risk profile seems to be pretty decent for this company. If you look at the debt to EBITDA ratio of the company, it's only improved from the time that we've seen 1.5 times that we've seen in FY19, and now it's come down to 0.5 times in the first half of the financial year. We've seen a strong amount of operational performance and the cash flow, which in turn has aided the debt to EBITDA ratio of the company. And also CRISIL goes on to say for the medium term, it expects that to remain healthy under the 2 times level, given that the cash flow generation is expected to continue at a steady pace for this company. And also because of the receding debt. JM Financial in the brokerage report has also said that they expect the company to be a debt-free company in a span of next 2 to 3 years, for that matter, maybe. Right now, the debt position, if you talk about that, it's a 250 to 80 crore kind of debt position that the company has. Apart from that, also if you look at the cash reserves of the company, the free cash flow situation, that's a pretty picture out there. Free cash flow have only risen from FY18. Cumulative free cash flows as of the first half of this financial year, they form 86% of a PAT. So clearly you can see the number out there, that's out for you. And if you look at the return ratio, or for that matter return on capital employed, which is nothing but a ratio which equates the capital efficiency as compared to the improving profitability of the company, that has only increased and has stayed around that 22% kind of level if you look in the first half of the financial year. Apart from that, few other positives that are working in the favor of the company right now. It's going to be coming up with a capex plan, all of which will be funded internally. It belongs to Murugappa Group company, where you have seeing a strong franchisee. Apart from that, because of this, the ability to raise funds at attractive rate of interest also comes in. Apart from that, if you talk about the PBT margins of the company is actually over delivered here. It has said that it's going to be meeting up the targets, achieving the targets of around 10 to 11% kind of PBT margin by FY 2023, but it's 9.5% at this point of time. They might just go ahead and revise that upwards anytime soon. But on the downside, 2 things which are technically not going well for the company is the bicycle division. That the little sluggish performance coming in from that division, and also since the majority of its revenue is still coming in from the automobile sector, because of its the cyclical performance comes in, that could be weighing down on the counter. But otherwise, net if you look at the performance of the company, it's been a fairly steady picture. Operationally, it's done well. The capital employed, the ratios look pretty. It's going to be a debt-free company in the span of next 2 to 3 years. So going seems to be good right now for the company.